Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. So we're going to be looking at the chart of Wells Fargo here in the higher time frame, weekly and daily. Now we don't cover this stock, but from time to time we're going to be looking at some stocks that we don't cover, right? And this is one of them. And as you know that we already had two collapse in the banking sectors in the US with the Silicon Valley Bank and then the First Republic also have to be bailed out by JP Morgan. So here we are looking at just the banking in general, Wells Fargo. I'm not saying this is, this bank has problem, but it basically gives us a sense of what we're going to be looking at in the banking sectors, right? In the US especially. Now we can see on the weekly time frame here, we completed this with one. This is a super cycle degree, very large time frame. So this pullback here is kind of like an all-time correction, basically correcting the whole entire rally from all-time low. So whatever the first price that it started to trade is basically correcting the entire rally, right, within the wave 2 in the super cycle here. You can see right here in the structure of the pullback, you can clearly see we got a lower low here. This one is your connector, right? So we got this move down, and then you got a connector here. Now this one, it does look like a 5 waves in one, at a glance looks like a 5 waves, but then there is no divergence right here. If when you go to the lower time frame, let's say if we go to the weekly, you can see there is no divergence here. So that usually signals that it is not wave 5 when there is no divergence in the momentum. If I downgrade to the daily, and this is the same thing here, that it can, at the first glance it looks like a 5 waves. Also no divergence here as well. That's why we are calling this move down here as a 3 waves. So this is A, B, C, and then you can divide this into 5 waves in the internal subdivision, right? And then you have this rally X here ended here, right? And there is a little bit of a flat in the middle, running flat, but overall it makes new low below W. So obviously this is not a 5 ways up, and you know that because there's no divergence here either. You see, if this is 1 2 3 4 5, the people never look at the divergence and the RSI momentum. They just simply label 1 2 3 4 5. Well then, if it is a 5 ways, how come it makes new low, right? But there is no divergence here. When you look at the lower time frame as well, you can see here this one no divergence, so you cannot call this 1 2 3 4 5, just like you cannot call this 1 2 3 4 5 since there is no divergence at the lows, right? So we ended the correction here and then starts to make a new low again below that previous low. So we got a sequence of lower low here, and if you just simply measure the extension between this leg here, so this is your first leg and this is your second leg, and the third leg should be looking for it doesn't always reach the 100%, but ideally it reaches the equality in terms of the length, and the equality target is at $25, which is a significant move down from where we are, right? And you can see the last move lower here is also looking like a 5 waves. So all in all, I think it suggests we should continue to see further weakness in the banking sectors, and therefore you can think of it, if the banking sectors still continue to go weak, so what's going to happen to the broader index, to the S&P, to the Dow, and so on. So I think the banking sector is going to provide a ceiling in any kind of rally, and especially in the US indices, right? Because the other indices might be relatively stronger, like when you're looking at the Asian Nifty, for example, looks pretty strong. European also looks pretty good, but the US indices definitely is one of the weaker ones right now in global indices. So here we're looking for rally to fail here. Now the P can either do one more push before going down in the case of Wells Fargo, or the P could be completed already and then we can continue to go down immediately. For now, we're still calling for more upside in the shorter cycle before we start turning lower again. But the sequence here clearly is a lower low and without reaching 100%. So more likely than not, we can continue to see more downside, and the last leg here also looks like a 5 ways down. So this is a weekly time frame to give sort of like a idea of the long-term path in Wells Fargo. If I go to the daily, it's the same. I just, in the daily we can look for more subdivision, but this is basically the same chart. So we got the peak here with one in the super cycle, and then you have this first leg, the second leg, and then you make a new low below this previous low. So for now, the rally, like I mentioned before, it can either end the P here and we can start to go down right away, or else we can do one more push higher before we go down. Now if we look at other indices like the Nikkei and so on, there is a chance for this move up here, and that's why we are calling possibly still can move up before we turn lower again. Now if we can really go higher in the shorter cycle, then Wells Fargo can rally all the way to the 100% extension, for example, around 46, where it can fail and then starts to turn lower again for the next leg down. Okay, so that's kind of a quick update on the long-term direction for the Wells Fargo. Now, if you're interested in stocks and ETF, we do have 14 days trial. The link is in the description of the video. We also cover cryptos, Forex, as well as commodities as well. So I'll see you all again next time, and have a nice day, everyone.